Hey everyone, welcome back. We're diving into a classic today. Get Into My Trading Room by Alexander Elder. A lot of you have asked for something to get you up to speed quickly on trading, and this book's a perfect place to start.
Oh, it definitely is. You know, it's not just about charts and indicators. Elder really makes you think about your approach from the very beginning.
Yeah, he does. Like right off the bat, he asks, are you an investor, a trader, or a gambler? Kind of sets the stage, right?
It does, and he uses that analogy of those three paths. The investor's on this leisurely stroll, enjoying the scenery. The trader's venturing a bit deeper, looking for opportunities, but with a plan.
And the gambler, headed straight for trouble, huh?
You could say that.
Right.
And that's the point. It forces you to confront your motivations, your risk tolerance. Are you in it for the long haul, or are you looking for a quick buck?
He even tells that story about his friend in Abu Dhabi, the one who got caught up in the gold craze. He thought he had it all figured out, but ended up losing everything, even his house. It's a pretty stark warning, isn't it? Oh, absolutely. It underscores that whether you're investing or trading, discipline is paramount. You can't just go on gut feeling. Successful investors, they look for trends, but they think long-term. Like imagine someone back in the 70s who saw more women entering the workforce.
Okay, yeah.
They might have thought, hey, childcare centers, that's a good bet. Invested in something like KinderCare and, well, you can imagine the payoff.
That's incredible, but holding those positions for that long, talk about patience.
Exactly, and that's where the trader's path diverges. They're not necessarily looking for those long-term holds. They capitalize on, the market's irrationality. When everyone else is panicking, they see opportunity.
So let's say you figured out your path, you're ready to jump in, but how do you even choose the right market to trade? There are so many.
Elder focuses on two key factors, liquidity and volatility.
Oh.
Liquidity means you can easily enter and exit positions.
Makes sense.
It's like, imagine trying to escape a crowded theater through a tiny door. Not good, right?
Yikes. Not a good situation at all. And volatility.
Volatility, that's the amount of price movement. You need some movement for profit potential. But for beginners, too much volatility can be overwhelming. He even recommends starting with the less volatile options within a group. Like if you're looking at commodities, maybe focus on corn instead of wheat or soybeans.
That's interesting. He also talks about those hidden costs, right? Like transaction fees. Remember that analogy with the girl in the guinea pig factory?
Yes. She forgets about the transportation costs. Such a good illustration of how those seemingly small expenses add up, especially if you're trading a lot.
So finding the right market, understanding those costs, that's all essential, but I'm guessing that's not all it takes.
Nope, not even close.
Yeah.
Elder lays out his 3 M's of successful trading: mind, method, and money. They're the foundation.
Mind, method, and money. I like that. Let's break it down. What does he mean by mind?
Mind, it's all about the right psychological approach. Discipline, emotional control, and accepting those losses gracefully.
He even compares the challenges traders face to the principles of Alcoholics Anonymous. That was pretty eye-opening.
Yeah, it's about self-awareness, honesty. You can't blame everything on external factors. Every trade, good or bad, it's your responsibility.
Taking ownership, recognizing you're in control.
Exactly. Then we have method. That's your system for analyzing the market, using charts, indicators, all those technical tools.
Okay, so he's talking about things like moving averages, all those indicators with the complicated names. Honestly, those can seem a bit daunting to someone new.
They can, yeah. But it's important to remember, these tools aren't magic. They reflect crowd psychology. What do you think is more helpful? Knowing every single indicator or understanding how fear and greed move markets?
Understanding the why behind the movements, that's got to be key.
Right, and that's why he's such a big proponent of testing these tools on historical data before risking real money.
So understanding why an indicator works, not just following it blindly.
Exactly. Which brings us to the third M, money, risk management, and Elder. He's got strong opinions on that one.
Oh, I bet. Lay it on me.
Protecting your capital, that's paramount.
Yeah.
You can be brilliant with analysis and have the best method, but without good risk management, you're setting yourself up for failure. Imagine winning the lottery but losing the ticket before you cash it in.
Ouch. Yeah, not good. So how does he recommend managing that risk? Okay, so those risk management rules, I'm really curious about those. What are they all about?
Well, he's got his famous 2% rule and 6% rule. The 2% rule, That means you should never risk more than 2% of your account on a single trade.
So if I have, like, say, $10,000, I shouldn't risk more than $200 on one trade.
Exactly. That way, even a string of losses, it won't wipe you out. And then the 6% rule, that limits your total risk across all your open trades to 6% of your account.
Oh, so it's like a safety net for your whole portfolio. I remember he uses that cool analogy,
Yeah.
the submarine.
Yeah, he compares your account to a submarine with a double hull. The 2% rule, that's your outer hull, protects you from those individual torpedoes, the bad trades.
Oh, okay, I see.
And the 6% rule, that's like the inner hull. Even if you get hit by a few torpedoes, you're not going down.
Love that visual. It really brings home the importance of those layers of protection. But Elder doesn't want us to just play it safe all the time, right? He thinks trading can be a really fulfilling career.
Oh, for sure. He maps out that journey. From amateur to pro, it's all about deliberate practice, discipline, and being able to adapt.
He's big on treating trading like a business, not a gamble.
Absolutely. And keeping detailed records. He's a big advocate for that.
I remember that. So what's the value there, beyond just the numbers?
He suggests a trader spreadsheet. Log everything. Your entries, exits, profits, losses, how your whole system is performing. It's like your personal scorecard.
So you can see what's working, what's not, track your progress.
Right. Forces you to confront those mistakes.
Yeah.
And learn from them. He says that self-awareness is crucial to becoming a better trader. He even talks about how your emotional state changes as you get more experience.
He's talking about those 10 points, right? How your control shifts as you become more disciplined. You start to see the market more objectively.
Yeah, like you're seeing the Matrix or something.
Yeah.
It's that clarity that lets you spot those little shifts that most people miss. And that's where trading psychology and technical analysis really connect.
It's not just the numbers, it's those emotional forces driving the market.
Right. That's why he's so into keeping a trading diary. Not just what you did, but how you felt. Anxious, greedy, overconfident.
Like a journal, but for traders. Become more aware of your own biases.
Exactly. See how those feelings impact your choices. It's about understanding yourself as much as the market.
That makes a lot of sense. So we've talked about mindset, emotions, but what about practical stuff? Does Elder give any guidance on making a trading plan?
Oh, he does. He gets into the details. How to define your entries, your exits, setting profit targets, stop-loss orders, having that clear risk management for each trade. He even walks through real examples.
That must be so helpful to see how it all works in real life.
Totally. And he stresses your plan should be for you, your personality, your risk tolerance. There's no one-size-fits-all in trading.
He also has a really interesting view on why we trade, right? It's more than just the money.
Yeah, he says trading should be like high-paying, high-integrity self-employment. It's a pretty powerful concept. It's not about getting rich quick. It's about building a real career.
It goes back to those 3 paths, right? The trader's path, it comes with a certain level of responsibility.
For sure. And Elder gives you the steps. Choosing your market, mastering technical analysis, the discipline, the psychology of it all, managing that risk.
So far, we've talked about trading in general. Does Elder actually dive into specific markets, like stocks, futures, options?
He does. He looks at each market and how its characteristics affect your approach. For instance, with stocks, he stresses liquidity and volatility again. You don't want to be stuck in a stock that barely trades or swings wildly without knowing why.
So for someone new to stocks, where would you even start?
He actually warns beginners against those super volatile areas, like stock index futures. He calls them rockets.
Because they can take off without warning?
Exactly. Start with something less volatile. Understand what's moving the price.
So where do futures fit into this picture?
With futures, Elder talks about understanding the role of hedgers.
Hedgers. Can you explain that a bit more?
They're businesses that use futures to manage their price risk. Like a farmer who wants to lock in a price for their crop months in advance, protects them from a price drop.
Makes sense. But why are hedgers so important for traders to understand?
Well, Elder says they're often the smart money because they really understand their industry.
So if you can see what they're doing, you might get some insights into the market direction. Can you actually track their activity?
He mentions something called the Commitments of Traders Report, the COT report. It tracks different groups in the futures market, including hedgers. Knowing their positions can give you an edge.
That's fascinating. It's like finding those little clues to help you make better decisions. What about contango and inversion? Those sound kind of complicated.
They can be, yeah. But Elder breaks it down. Contango basically means futures contracts further in the future are priced higher than those closer in.
So it costs more to buy something further out.
Right. Usually because of storage costs and financing. Then there's inversion, the opposite. Contracts further out are cheaper than the near-term ones.
That seems counterintuitive. Why would that happen?
It often means there's a shortage right now. The price for immediate delivery gets pushed up. Understanding these things helps you decide when to get in and out of trades.
And seasonality seems like it'd be super important too, especially in futures.
Oh, absolutely. Elder points out, especially with agricultural commodities, like grains, they often spike in price during planting and growing season, because of weather. Then, once the harvest comes in, demand takes over.
So you got to adjust your approach depending on what time of year it is.
Exactly. He also explains how futures markets have natural limits based on supply and demand.
Like invisible barriers.
Kind of, yeah. The floor price is usually the cost of production. A farmer's not going to sell wheat for less than it costs to grow.
Right, they'd be losing money.
And the ceiling. That's usually determined by what it costs to just use something else.
So if wheat gets too pricey, people might just switch to rice.
Exactly. Understanding these basics, along with your technical analysis, helps you find those good trades. Now let's move on to options. Any questions about those?
Definitely. Options always seem kind of mysterious to me. Does Elder have any advice on how to approach trading them?
He does. He describes options as hope. Buyers are paying for hope. They're betting on the future price of something.
So if I think a stock's going up, I buy a call option. That gives me the right to buy the stock at a certain price later.
Yep. And if you think it's going down, you buy a put option, the right to sell it at a certain price.
But what's this thing about savvy traders profiting by selling that hope?
He's talking about naked writing. You sell options without even owning the stock. It can be profitable, but risky.
That does sound risky. Is that something he recommends for beginners?
He explains how it works, what to think about before trying it, but he makes it clear it's not for the faint of heart. He talks about covered writing, too. That's less risky. You sell options on stock you already own.
So if I have 100 shares, I could sell call options on them, maybe earn some extra income.
Exactly. And if the price stays below the strike price, the options expire worthless, and you keep the premium.
Okay, I'm starting to get it. So Elder covers all these different strategies for different markets, but it all comes back to those core principles, right?
You got it. Risk management, discipline, knowing yourself. Those are crucial, no matter what you're trading or how you're doing it.
I'm seeing how all these pieces fit together now. But what about the psychology of all this? Does Elder have any tips on handling the emotional ups and downs? We've covered a ton already. Choosing your market, the technical side, even options. But that psychological aspect keeps coming up. It seems like mastering your emotions, that's just as important as any indicator.
It's huge. Elder's really clear about that. Controlling your emotions, that's the key to success. You could have the best system in the world, but if you can't handle the emotional roller coaster, you're going to fail.
Makes sense. You might have all the right signals, but then fear kicks in, you get out too early, or greed takes over, and you hold on too long.
Exactly. And he makes a good point. There's a difference between a businessman's risk and a loss. Remember that fruit stand example?
Oh, yeah?
He says for a fruit vendor, buying a crate of some exotic fruit, that's a calculated risk. If it doesn't sell, it's a setback, but it's manageable.
But if they buy a whole truckload, without knowing if anyone even wants it?
That's a potential wipeout. In trading, it's about knowing your limits. How much can you afford to lose on any given trade without blowing up your account?
So accepting those smaller risks, but avoiding the ones that could really hurt you.
Right. And that's where those rules come in, the 2%, 6%. They keep you from making those rash decisions based on fear or greed. But he doesn't stop there. He really gets into those psychological traps that traders fall into.
What kinds of traps?
Well, like beginners often getting fixated on the potential rewards without fully understanding the risks. The idea of quick riches, it's seductive. They start overtrading, risking way too much.
They become gamblers, not traders, just chasing the win without thinking about the consequences.
Right. He says successful traders, they're obsessed with preserving capital. First priority is staying in the game. Then come the steady gains. Only then can you think about those big scores.
So it's like turning the whole thing upside down. It's not about how much you can win, it's how much you can afford to lose.
Exactly. He even tells a story about this really successful money manager who still worries about ending up as a taxi driver if he loses everything. It's a good reminder that even the pros, they know the market can be unpredictable.
They respect that power of risk. That's pretty humbling.
That's the difference, between amateur and professional. It's not about being fearless. It's about discipline, calculation, and always having that respect for the potential for loss.
So becoming a professional trader, It's not just the skills or the systems, it's that deeper understanding of yourself, your emotions, and how you handle risk.
And he takes it even further. He makes you think about what financial freedom really means to you. It's not just the money, it's about your trading goals, matching up with your life goals.
Like questioning your spending habits, whether you really need all the stuff you think you do.
Simplifying your life. He says that can make you a better trader. Less pressure to chase profits so you can make those clear-headed decisions.
I remember that story about the trader who retired at 31, then spent the rest of his life doing what he loved and giving back.
Right, it shows you trading can be a tool to create the life you want.
Like
Life
how?
with purpose, with freedom.
That's awesome. It really seems like Elder's whole approach, it's so much bigger than just making money. It's personal growth, self-awareness, aligning your finances with what you value.
He wants you to become a more conscious trader, someone who's in control of their emotions, their money, and their future.
This deep dive, it's been incredible. We've covered so much ground. The three paths, choosing your market, those three M's, technical analysis, managing risk, the psychology of it all. We even touched on how things work differently in stocks, futures, and options.
All through the lens of Elder's insights. And his humor. He really makes trading approachable.
One of the biggest things I'm taking away is that trading can be a path to financial freedom, even self-employment. But it's on us to develop the skills and the mindset to get there.
As you continue your trading journey, remember Elder's challenge. What will it take for you to achieve that freedom? And what will that freedom look like in your life?
It's a great question for all of us. Thanks for joining us on this deep dive into the world of trading.